Hey everyone, welcome back to Corporate Decoder. Today, PHP Ventures Acquisition Corporation just filed an 8K, and I'm seeing one very simple detail that tells a big story. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is about a small cash injection to buy more time, and it reveals a common struggle for companies like this. This is where we see the core of what is happening. PHP Ventures Acquisition Corporation, essentially a company created to buy another company, is filing an update. The date of this filing is the 13th of July 2026. For companies like this one, which are often called SPACs or Special Purpose Acquisition Companies, the clock is always ticking to find and buy a business. PHP Ventures Acquisition Corp is the name of our company. They are incorporated in Delaware, which is a popular state for businesses in the US because of its corporate-friendly laws. Here we see their commission file number, which is like their official ID with the US Securities and Exchange Commission. And then there is the IRS Employer Identification Number, which is their tax ID. These are just administrative details that help regulators keep track of them. This is their address in New York City. Think of them as being in the heart of a major financial hub, which is typical for companies like this. But remember, for a SPAC, the physical location is usually less important than its financial strategy. This part is a bit of a checklist. It is asking if this filing is being used to communicate in other ways, like for advertising or to start conversations about a takeover. In this case, none of those boxes are checked, so this is a straightforward update. This is a significant point. It says that the company does not have any of its securities registered to be traded on a major stock exchange like the Nasdaq or New York Stock Exchange. And here is why the company was suspended from trading on the Nasdaq. This usually means they failed to meet the exchange's requirements, which can happen for many reasons, often related to financial health or reporting. A Form 25 is typically filed to remove a security from listing on an exchange. This tells us that the company is no longer traded on a major exchange and is likely on the over-the-counter markets, which are much more speculative. PHP Ventures Acquisition Corp is identifying itself as an emerging growth company. This is a status given to newer companies that have less than a certain amount of revenue. It allows them to have some flexibility with financial reporting rules for a period of time. Now we get to the main event of this filing. This is where they announce any other important things happening with the company that aren't covered in other specific sections. This is the heart of the story. The company has put a very small amount of money, just $957.3, into their trust account. Why would they do this? To buy themselves an extra month to find a company to buy and merge with. Their deadline was the 16th of July 2026, and by adding this tiny amount, they've pushed it to the 16th of August 2026. Think about what this means. A trust account for a SPAC is usually funded with the money raised from selling shares to the public before they even have a target company. This money is held in trust until they complete a deal or the deadline passes. If they don't find a deal, that money is supposed to go back to the shareholders. Putting in just $957.3 to extend the deadline by a whole month strongly suggests they are struggling to find a suitable business to acquire. It is a very small amount, and it points to them trying to squeeze out every last bit of time without contributing significant additional capital. It is a common tactic for SPACs that are running out of time and cash. But it often doesn't change the ultimate outcome. Many SPACs that reach this stage end up liquidating, meaning the money in the trust is returned to shareholders and the company essentially closes down. Here we see the company name again, confirming who is signing off on this report. This is the date the report was signed, just before the original deadline. And this is the signature of Marcus Chu Yao NGO, who is acting as the Chief Executive Officer and Director of PHP Ventures Acquisition Corp. He is the one making this official filing. Looking at this filing, the story is clear. PHP Ventures Acquisition Corp is a SPAC that is facing a tough deadline. The fact that they are extending it with what seems like a minimal cash contribution signals that they are likely having trouble finding a business to merge with. This is a familiar pattern for many SPACs, especially those that aren't major players. When a SPAC stock is already suspended from trading on a major exchange, as is the case here, the challenges are even greater. The market typically views these extensions with caution, as they often lead to either a rushed, less than ideal merger or eventual liquidation. The risk here for any remaining shareholders is that the company might not be able to secure a deal before their extended deadline. What I am actually looking for is whether they can find a credible business partner in this extended timeframe, given the trading suspension. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.